Hello, everybody, and welcome to the channel again. Please know that this information is only for educational purposes and it does not constitute investment advice. If you are copy trading, you are an absolute moron and you deserve to lose all your money. With that out of the way, today's idea is a short for CF Industries Holdings, ticker CF. If you have not heard about this company, they are a fertilizer producer, one of the biggest in the world. It's a sector that is heavily dominated by very, very large players. So first thing that we have a look here is a chart that is looking more and more bearish as time goes by. So it's pretty much flat since the start of the year when it's set at around 80, sustained those levels, dropped, and then it recovered. Now, the interesting thing here is that over the last month, the month of November, which started here, we have seen a lot of things going up. Stocks going up, tech going up, TLT going up, but this stock is actually down quite a bit from 80 to 73. So definitely this stock is not keeping up with the market. At the same time, we have the drop here from the standard moving averages. So this is signaling to us that timing is on a good spot at the moment, and short interest as well increasing over here. So the market is telling us that they feel increasingly bearish about the stock. And why is that? Well, this isn't a company that had a very, very good couple of years in the past. You can see after the drop in the corona outbreak, it fell quite hard. Then, as many other things, went up quite a lot. But the interesting thing is that in terms of EPS, had one of its best years in 2022. Let's go back to the EPS numbers. So if you look at this on an annual basis, look at the EPS. Uh, Last year at 17.60, way, way above previous levels of 640. And this year is expected at 817. So, yet we see uh, the stock has not really dropped that much compared to those levels. It was at around 120 as an all-time high, currently at 73. So I think this stock still has room to drop a little bit more. Why is that? Well, first of all, today is the 6th of December 2023. And what that means is that today there's going to be a vote at the Senate where the Biden administration is going to be asking for a package or aid in Ukraine. So that could be a catalyst for the stock because if that happens, that means that there's further aid going into Ukraine. It could have implications for the natural gas. So we could see quite a few things moving fast over here. The other thing as well is that when you look at the fertilizer market, and by the way, natural gas is important for fertilizers because it's one of the main input costs in the production of this raw material. But that commodity have has picked up quite a bit in recent months. It had a bit of a rally around the month of September, but is dropping now that fuel prices are falling, and there's different specialists in this market. I see those fertilizer prices not returning to previous highs, and as we can see here, the market seems to agree with that view. After that is more recently. After that rise in September, October, we see that those prices are falling now. So we are at a point here where we are gonna test this resistance. You can see that resistance here, here, and here, and here. We're a bit of a breaking point, so we could see a sudden move downwards here, and I want to be prepared as we are just starting to break through those levels. You can see it on the chart here as well. Right here, you could break. Okay. Now, um, the Ukraine war seems to be taking a turn with Russia taking the lead, many European countries pulling back from it. We'll have to keep an eye on that. That could be a risk. But regardless of that catalyst, it is expected that Canadian fertilizer exports will likely continue to surge in 2024. So you see that country uh, filling the market with fertilizer, which could be hindering the price levels. Okay. And we also have to remind what's happening in China. They want to recover that economy as soon as possible. But the reality is that places like India, China, Asia, and Europe in general, uh, they have more subsidies from governments to bolster that production, which doesn't really happen in the Americas. So we could see, those markets continue to bolster production, whilst these guys are, left to continue what they're doing, and production of obviously affecting those prices. So that's something that is expected to happen. Um, the World Bank is projecting fertilizer prices to fall 7.1 year on year nonetheless in 2024. So it's no secret that uh, these prices are going to continue to be subdued. And in terms of risks, we could see, for example, high grain demand supporting those prices for now. We could see the escalation of Ukraine war, and we'll have to keep an eye on natural gas prices. But overall, I feel this is a sector that has been very overheated, and it is not looking very, very attractive in terms of growth for 2024. So I'm going to show this one. Reason why we're doing that, you can see the valuation of this stock against other peers. And interestingly, over the last few weeks, we have seen CF going down in this blue line here, whilst you have other peers that are slightly lower valuations going up quite a bit. Even the larger valuation ones going up quite a bit. So the market is not liking this stock at the moment. Potentially, we could see others like these ones over here as a long for a spread. This would have made a wonderful spread actually. But I'm gonna enter now, and the reason why I'm gonna structure with options is, well, first of all, it's a short, so I prefer to do shorts with put options to avoid gap risk. And because of the timing, I'm gonna buy for 16th February $72.50 puts at 370 and sell to 19th of January 72.50 puts at 240. That gives me a net spend of around a grand. If it gets to 69, say before that 19th January expiry, I make 42%. If it gets at that level after, I could make a lot more. Hope you enjoyed the video. Thank you and see you soon.